Jim Malone here, coming to you live on Dallas trading floor. Boy, tough day on the market. Definitely tough day on the market today, and lots to talk about. So let's get into it as much as we can. I just wanted to kind of go through some of the events that are going on here, and and just see kind of what we can do from here. I definitely did move away from some of my trades today. So let's get into it and get going here. All right. Basically, the crude oil futures moved higher. We're basically at about 123 per barrel on Tuesday. We've raised up. I definitely did trim a little bit of my portfolio here. I did trim, so I sold I sold Nutrien. Nice profit on that one. And I did sell Matador as well. So my portfolio is a little bit different than it was. I'm going to be concentrating probably due to kind of what's going on some spread trades, and I'll show you the how those are going. So without further ado, let's get into it. Basically, the Nasdaq Composite is moved lower. So again, it does look like we are in a situation where we might be best to to basically go with the resource stocks and then possibly go and short some of the other stocks. I'm going to be showing you that in a second here. So let's go over to the Nasdaq chart. I want to kind of show you the situation here. We're basically down again today, about 0.28%. We're well below the 200-day line, so we're definitely in a correction. So we don't want to be, we want to be very careful about the stocks that we buy. We want to only buy in certain areas. We do have a death cross, what they call the death cross, on the Nasdaq as the 40-day line moved below the 200-day line. And what this tells us is that we are going to be probably in for some more weakness here before things get better. So we want to be extremely careful about where we're buying currently, what portions of the market that we're buying in. We just want to be super careful about that. Here's a stock though that I did buy today, and it's kind of obvious. I suppose it's an obvious one, and that is Barrick Gold. The symbol of this one is GOLD. It's Barrick Gold. It's up a little bit, so let's take a look at the chart on that one. GOLD, of course, is the stock that we are talking about here. So I'm going to go over here to the chart and take a look at it. As you can see, we're moving very nicely on this one, and we are definitely showing a movement above. Now, I did buy it above the pivot. So probably not the greatest entry. I would have liked to have bought it before that, but I just didn't get a chance at it. But this one is starting to, with gold going over $2,000 an ounce, it's likely that we're going to see some strength here. Also, if you'll note, back in May of last year, we did have a high of 25.37. We have just achieved, we've just moved beyond that. So this one may do well in the future. I'm going to take a look at some of the fundamentals on this one on the weekly chart. Let's come over to that. And then basically, there we go. We did just go through, we just kind of went through earnings here. The sales were only up 1%, not a lot really, but it does change change the dynamic here. It does change the dynamic. We had been falling sales, and then the December quarter, it has started to move the other way. So the question is, where can we go from here? This one is a fairly high PE stock for a gold stock, 21, but I do think the flight in gold should favor this stock. So we will see kind of how that goes from here. I also did buy another stock. It's in the pipeline area. It's Enterprise, it's EPD. which is Enterprise Enterprise Product Partners, and uh, it is in the natural gas pipeline business. Um, I do have LNG. There we go. EPD. There we go. Okay. Let's see if I can get that. There we go. It did move nicely today. I did make a buy in the buy zone. Now this one is in the buy zone currently, EPD, and it is setting up very nicely. It's got a 78 checklist, so that's looking good, and it does look fairly good here with the double bottom pattern coming in. And I did buy this one today. I did buy a full position, not in my main account, but in another account that I manage. So this one is looking fairly good as well. We entered it right as it was moving in the buy zone. So it's still currently in the buy zone. It's off a little bit after hours, about 24 cents after hours. But the buy zone on Enterprise Product Partners, EPD, is 24.76. And this tends to be a pretty good area. It seems like it's a very conservative buy in terms of something going long because of course, it's got pretty much guaranteed income because of the gas transmission. We do think that there's going to be a bit of a constraint on natural gas that seems to be moving well. So right now, that's one that you might want to look into as well. EPD, it's in a buy zone currently. Just want to show you the volatility on the market. This is the VIX, and the VIX has, it's still moving up. It's still very volatile. So we're still very volatile in the market. We're down a little bit today, fortunately, down about 2.6%. So maybe some of the volatility is moving away. It's very tough to trade this market because, of course, the situation in the Ukraine and also with oil prices. Oil prices basically are a leading indicators, 6-month leading indicator of where we're going to go in the economy, and get ready for some serious inflation. We're going to see, I think, some very high gas prices, particularly in California. I think we could easily see over $7 a gallon there. Here in Texas, it's not quite as bad, but still, we're paying over $3 a gallon, which is a lot for Texas. So, that's gonna fuel inflation, quite a bit of inflation. So, get ready for that. It's not. I mean, how can you really get ready for that? Here, I want to show you some of the condition of my small portfolio. We did have. We are up basically, fortunately, in Cheniere. That's LNG. That's the LNG. Then we're also in Williams Company. This is also a gas pipeline. Seem to have been doing pretty well with that. We're up about 8%, even on a down day in the market. Northern Oil and Gas, we're up on that one. We did sell into strength. We sold Matador today, and we also sold Nutrien. Let's take a look at Nutrien, NTR. This is the fertilizer play that was doing so well. We did decide to sell it into strength, because right now, if we're above about 10% in terms of our profits, we tend to want to take them relatively quickly. This one we did sell. We sold at 94. Oops, there we go. It sold at 94.88. Currently in the after hours, again, it sort of has pulled back to 94.34. We may get another chance on this one, but this was just getting too steep. We had bought it right before the pivot at 74.24, and then added to the position, and then sold it today. Now we may take another position here, but this is Nutrien, and Nutrien has been doing, it's been doing fairly well. It's been very well. This is a very strong sector right now, the fertilizer sector. But we did take profits in this one, in this area. So also we did sell Matador out of the small portfolio. MTDR, of course, is the symbol there. We do have other oil and gas we do have some other oil and gas stocks, but we decided to sell this one, take profits, as quickly as we could. There is this one we did sell right as it pulled back. It's down quite a bit today, about 3%, but we stopped out at 51.65. Currently, the price in the after hours is 52.27. But again, we do have some other oil and gas stocks in the mix right now. We are in Northern Oil and Gas, NOG, and then we also have some other ones. We didn't do anything with Berkshire, BRKB. Of course, that is Berkshire Hathaway. This is the B shares. Of course, the A shares practically untradeable, of course, because of their incredibly high costs. But this is the B shares, and with the B shares, we are up strongly after hours in this one, 323. So we did buy a 3/4 position here a few days ago in Berkshire. You know, this is sort of a safety play, and it is extended, so I don't really totally recommend buy here just because of how extended it is above the 295, 65 buy point. We did buy at 328, but we did buy on a pullback to the 21-day line. That's a secondary buy point for everyone out there that's watching that. So, kind of a lot of information there. The current holdings, of course, that we have currently are LNG, and then we did sell Nutrien, so this is not quite correct. We did sell Nutrien, so we don't have that one anymore. And we were in Williams, we're in Northern Oil and Gas, Berkshire Hathaway, Callon Petroleum. We made a buy in Callon Petroleum. Let's go over and take a look at that. CPE, and that is going to be it. Hold on one sec. That's CPE. There we go. Callon Petroleum. This one did make a nice move, and but we are in Callon Petroleum. We did buy a full position at 60.97. Currently, it's basically right exactly pretty much where we bought it, and it basically closed out at 60.97. So basically nothing moving there, but we have moved above the buy point and the pivot. So this is one, if you want to do an oil, this is 100% rating on this one. So this is also in a buy zone. You potentially could buy this one here. If you did want to buy the one. So currently CPE is in a buy zone. So if you're just itching to get somewhat invested in the market, and this is a tough market to trade, I'll tell you. If you want to get into the resource stocks, the commodity stocks, the oil and gas, those are the kind of stocks you want to be in. And currently, this one, CPE, is in the buy zone. So you definitely could make a buy here on this one. So just something to consider when you're looking to buy. Right now, we're pretty much all in cash, and in the small portfolio, we are invested in the small portfolio, but most of our reserves are in cash in our other accounts. We have been shorting, and I want to show you the results of several of the short trades. We do have one long trade, and we may have to be adjusting this one. It's on Rio. But let's look at, first of all, if you've been following us, we have a short on Lululemon. And Lululemon, of course, has not, has been a high flyer, great company, but we do believe that because of the way the market is trading, we're going to see a lot of air go out of these tires on these high-flying stocks. And Lululemon definitely is in that category. Lululemon moved back approximately 1.94% today, almost 2%. And as you can see, as the price of Lululemon goes lower with this spread trade, the value of the trade goes up. So this is a bear put spread, and hopefully, if we continue on this path, we will see a good result. Basically, if you look here again, this has the telltale sign. This is something that you should start looking for. This is the death cross. When I'm looking to short, I definitely look for this particular formation in the charts. And what this is the 40-day moving below the 200-day. This black line here is the 200-day moving average. And it does look like after a long time of ascending, as you can see, it's now leveled out and it's probably going to move down. This is a very subtle sign, but you can definitely employ it. If you take the 200-day line, you'll notice that it moves up very, very nicely, but then it starts to level off. When the 200-day levels off and the 40-day moves below it, that indicates a weakness in the issue and potentially a movement down. And that could be a very good place to have a bear put spread. Here's another one that we did do. This is the one that is not doing quite as well. This is Rio. This is a bull spread. The reason for that is, of course, Rio is a large mining company. And I did anticipate that miners probably would be moving up, but I'm wrong. I was wrong essentially on this one. It has pulled down. Even the miners are coming down, coming down a little bit. And right now, the value of this trade's about a negative 260. So we're going to have to do something here. More than likely, what I'm going to be doing is I am going to be adjusting this trade. And if you're not familiar with adjusting a trade, I probably will put out a video on this. But basically what we're doing is we're buying back the current position, and then we're moving out a month, and we're moving down just slightly. So this one isn't doing quite as well. This is a bull trade. So this benefits as the stock goes up, and it has moved against us a little bit. So we'll probably be adjusting this trade. We didn't get a fill today on it, but we will probably be adjusting this trade. Now for the other two spreads that we've got, we do have a bear call spread, and this is one on Tesla. This did move a little bit up today, and on the because of the oil price, but we do have. Let's pull up the chart. TSLA. This one did move up a little bit, but we are still in the green on this one. So I do think that the overall trend of Tesla, at least in the short term, is downward. So this is the live chart of Tesla. Give you a look at that. And we did move up almost 2% today, and then to 824. But we're still in a downward trend on Tesla. As you can see, there's still a trend. The trend here is still downward. So if this resumes its trend, we should be okay here. I do think that it's going to pull up to the 200-day line and then possibly move lower. That's kind of what it's looking like. The thing though is that the 200-day moving average is still ascending, so that could be an issue here in the short term. We may close this trade early based on the analysis of the 200-day line here. So one more, and then we'll probably get into the questions. Sorry to go so long here. Just a lot to talk about today. We also have a bear trade on Twilio. And Twilio has been making lower lows. And it's just one of those things. Again, we have a situation with Twilio where the we did go through this death cross here, where the 40-day dropped below the 200-day. We have and when you're shorting, if you can look at that 200-day line, if it's sloping down, that's going to give us an advantage in shorting, and that's definitely the case here. Twilio was off about 2% today. It's also down it's also down after hours. So this one is starting to move lower, and again, this is a bear put spread, and so we probably will benefit from that one as well. Well, if you want to take a look at that Lululemon trade, we do have up on the screen. We do have a link. It's https://bit.ly/DTF0092. I don't know if that's up still on the beacons on the profile, but that is definitely how you can take a look at it. If you also want to look at a list of oil and a ready list, this is the March 3rd ready list with pivot points. These are the buy points. That's also available. Super easy to get. Just go to https://bit.ly/DTF0094. So thank you everyone for bearing with us, and let's get into the to the questions. Thank you for waiting. Samuel is first today. Hey Jim, bought CLF, but is down today. What should I do? Okay, let's take a look at Cleveland Cliffs. This is just a bear of a tough market to trade, because it is so tricky. Even though you're definitely in the right place with Cleveland Cliffs, we just had this pullback, and again, this is a tough market to trade. I mean, it came up. You're buying it right in the buy zone. That's a great place on a double double bottom pattern. That's excellent. You made an excellent choice there, but it pulled back. So here's what I would do, and this is just it again. This is why it's so frustrating, and why right now it's probably best to be small. Go small rather than go big. So, but if you're down more than don't let this move against you. Don't let the stock move against you. If you're down more than 7%, just cut your losses. I know it's painful. I mean, I know it's painful. You entered it properly. It's just that's one of those things. And it definitely. I mean, it looks like it should have done better than this, but this is a crazy market with very driven by events. That's the problem when a market like this is driven by events so much. It's a harder market to trade. So here's my advice on that. If you're down more than 7%, cut your losses. Now, here's the thing: when you're entering a stock, try to go in with a half position first. And what do I mean by a half position? Well, if you consider your portfolio as a pizza, and there's 8 pizza slices, each one of those is a full position. In this market, it's probably not a great idea to go in with a full position. Even though I do this, even though I'm telling you that this is what I'm doing, it's not a good idea to come in with a full position. It's basically better to, below the pivot, this is the buy point that we're talking about, come in with a half a position, and then as it goes through the pivot, maybe another quarter, and then if it is in the buy zone, another quarter. That's the ideal way to come into a stock, and it's only if it's going up. So tough to do. But if you're down more than 7%, really the most important thing right now is to be very careful with your trades. By the way, people on TikTok, if you want to see all of the stuff that I'm showing, it's right up here. You've got to go to the profile, and then I'll be able to show you. Hopefully, shortly, I'm going to be able to show all my screens and everything. That's coming. We're not there yet technically, but hopefully we will get there soon. So if you jump on over to YouTube, you'll be able to see this, and I'll be able to show you this. By the way, it's all available too. So just go to the profile and click on that, and you'll see a feed for this episode, this YouTube episode. So thank you very much for that. Let's look at Jay. My beloved Apple is hitting the 200-day line. Ouch. Oh, man. I was reading an article in Investor Business Daily today on Apple, and basically the situation was, hey, they're going to come out with this great new they're going to come out with this great new iPhone, and they come out with the iPhone and it goes down. So not surprising. I mean, look at this. Apple is headed to the 200-day moving average. Now, the 200-day moving average is still moving up, which is good, but we're getting awful close to it. So here's the thing. I would be kind of, if you have a profit in this one, consider maybe reducing your position a little bit. That might work very well. I don't think it's the end of the world. I mean, this is the most valuable stock out there, but this is a tough market to trade. Again, I keep reiterating that. So I would look to, if I've got some profits, I maybe reduce my position. I'm back into cash in most of my accounts. Unfortunately, I'd like to be fully invested, but I just can't seem to make it work. as well as I'd like in this choppy market. All right, Mark is talking, he wants to take a look at Ford. And this, I wish I had better news. I wish I could say better news. Right now, the parts of the market that are working, everybody, are the resource stocks. Those are the oil and gas primarily. Some of the shipping stocks, and some of the mining stocks. Everything else seems to be doing fairly horrible, unfortunately. This is Ford Motor. Here's the thing about Ford Motor, and I just, this is going to be tough. If you're down more than 7% on this one, I would consider reducing your position here because we're below the 200-day line. Nothing good typically happens below that 200-day line. That's this black line that you're seeing here on the chart. Nothing good happens on that one. Basically, we have round tripped it. We have gone all the way back here. We had this cup breakout. We had this breakout at the buy point on Ford 97 days ago was 1645. We've totally round tripped that. Can you believe it? Now I was in it, but I added to my position, but then I sold out when I got the pullback, and I've been out ever since, just because it wasn't reacting as well. So unfortunately, if you were in at 1645, which is the correct place to have bought, you've totally round tripped it. This is why it's so important when a stock is making a move up. Ford went all the way up to 25.87, which was a tremendous gain. I mean, what I do, and this is why I sold Nutri, and this is why I sold Matador today, because as a stock goes up like this, I keep pushing my stop loss up. When it pulls back, I'm out of it. So if you're down more than 7% in Ford, I just think you got to jump out of it because it is not looking as good as we would really like to see. And I'm sorry about that. Well, it's just one of those things. Hey, thank you, man. Okay, let's see. Well, thank you for watching, by the way, if you're watching on TikTok. And if you can get on over to YouTube, I also have some, we're showing the charts there. I'm going to have the technical capability of doing a show with the charts on TikTok. That's coming, but we're not there, unfortunately, yet. So let's take some questions from TikTok. Thank you so very much. Do you know a stock for silver? Very good question. The thing about silver is whenever we get into one of these situations where we have a lot of inflation, and we really haven't had a lot of inflation for 40 years. Now, believe it or not, and I'm going to let you in on a secret. I'm old enough to remember the last time we had super duper inflation. That was in the Carter years. I was but a wee child then, but we had gas lines and it was not fun, and it was terrible. The mining stocks in general that you want to look at, I would look at Rio. Now, I do have a bull trade on Rio, but if you're looking for silver, this might be one that you're looking at. Now, here's the thing. I've told you to look at Rio, and of course, today it pulled back. So I can't be right all the time, not even close. But as you can see, I bought it there on the 11th. I entered the spread here, and then I've round tripped it. It went all the way up to the buy point 80.44, and then boom, it comes all the way back to the 21-day line. I think it's going to get some support at the 21-day line. That's my guess. If we go over to the 15-minute chart on Rio. Now, why Rio? Well, Rio Tinto, it's actually a English company, but it mainly operates in Australia. It's one of the largest mining companies in the world, and this might be an area that you want to get into. Metal. This is one of the few areas in the market right now that is doing well. Metal and mining ores. So this is an area of the market that is doing well. But Rio Tinto is definitely one of the biggest stocks in this one. So if you're looking for silver, that's the one I would kind of focus on. Can you buy it here? I would wait for it to reverse, and then I would wait to reverse. It went all the way up. The correct place to buy Rio Tinto is at about 80.44. So that's going to be your best bet. So for Rio, RIO, the buy point is uh, is 80.44. So that's so what do I mean by this buy point thing? Well, what I mean here is that if the stock moves above 80.44, that's a potentially good place to start getting into the stock. Now, this has a 100% checklist. I want to show you that 100% checklist. It's trading near its all-time highs, and but it is down 4%, 4% from the buy point. So we're 4% below the buy point. If this thing turns around tomorrow and moves above 77, it doesn't look like it's going to, but it might. This might be a good place to get into it. I'm still not convinced. I'm still not giving up with Rio Tinto. On my spread trade, I'm just going to move this thing further out because I do think we're going to see some movement there. Let's go to the monthly chart and take a look. This is going to kind of give us a view from 20,000 feet. But as you can see, and we want to look out here, since 1990, we're going all the way back to 1990, Rio Tinto made its all-time high right about here, very close to where it is currently. The all-time high for Rio Tinto on a split-adjusted basis was made way back here in 2008. Now, interestingly enough, that was right before the big crash in the market, but it made its all-time high here, and we were basically very, very close to that. It was 89.47 was the all-time high for Rio Tinto in 2008. We're currently at 77.58, but we were at 88.51. So I do believe that if this makes a new high, this one might do well. So just a thought on this one. Of course, the symbol on this one is RIO, R-I-O. You might want to put it on your watch list. All right, let's take a look. Is there what is the better way for Biden to promote the electric car and then blame it on Russia? Typical. Yeah, unfortunately it is. I'm very pro electric car, but here's the problem with electric cars, and everyone's got to get their hand around this. In order to build an electric car, it creates a lot of oil. Why? Because plastics are involved. Now, eventually, one day, we're going to have nuclear power and we're going to have electric cars, and we're not going to be as vulnerable to these swings in the price of oil. But here's the thing. We have a tremendous amount of oil in this country. The Permian Basin has tons and tons of oil. And politically, I realize that, for many, many years, the left has not liked the idea of oil because they don't believe that anybody should make money on something that comes out of the ground. I think they don't think it should be shared. But anyways, it's not. We need to increase our domestic production and we need not to be dependent on countries like Russia. Russia is a pariah state, but it's got nuclear weapons, so we don't need to be buying fuel from them. And finally now he's being forced into the position where he's not going to buy from Russia. But it was ridiculous. We didn't have to have. This is a self-inflicted wound. We need to start producing more oil in this country. That's one of the reasons why I'm looking to the E&P companies, the exploration and production companies. That's why I'm looking to buy them. That's why I bought CPE, because Callon Petroleum and other companies like it, and Matador like the one I just sold, these are producing domestic energy, and I think it's going to be very good for that. All right, buying calls on Meta. I don't think this is a very good idea. I'm not trying to tell anybody what to do, but the long-term trend on Facebook is down, and I'm going to probably be putting out a bear trade on it. Now I want to show you the 20,000 foot view on Facebook Meta. As you can see, it's pulled way down, and then now it's sort of starting to settle around this, just below this 200-day level. I think it's going lower, to be honest with you. So I would not be buying calls in this area. Why? Because this area of the market is being punished. I want to show you something here, and I think you need to look at this before you buy calls on Meta. As you can see, the 200-day line is starting to curve over. It's come up, 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 and now it's coming down. Do you notice that it starts to move down just as we get this big drop off? It's not looking good for Facebook. So my guess is this stock may be may be one that we want to potentially look to short. There's a lot of funds that are in this stock. According to my calculations, 5407. So 5,407 funds are in Facebook. It's going down. So what are they going to have to do? They're going to have to sell. So here's the thing. We can make money as these companies sell with bear put spreads. Right now, after hours, it's down again, 189. It pulled up to 190. My guess is typically this is the correct way to short it. As it's moving up, then we short it. So I'm looking possibly Facebook or Meta is on my short list. So I'm going to put short list, and that is on my short list as one that I may potentially short. So you want to be really careful with Facebook. It is in a downward trend. So not something, not where you really want to be there. Okay, let's look at the FANG. Oh, FANG. Okay, great. This is, by the way, Paulie, thank you so much for that. FANG it's not the FANG stocks, it's Diamondback Energy. And I do like this company an awful lot. I think it's a winner. And let's pull that. Yeah, there we go. Oh, so let's pull that panel. I'm just trying to get my panels to work. This, by the way, everybody, FANG, this one has a 100% checklist, so this is very good. Now, it is extended, unfortunately. So let's put that panel up and show everybody that. By the way, if you're looking on Facebook, you can see what I'm talking about with these. Oh, there we go. With Facebook, you can. On TikTok, you can see all the charts. You just have to go to my profile, click on over, and you'll be able to see the charts that I'm showing everybody that's on the YouTube feed. So here we go. We're above. There's a buy point on Diamondback at 116. Now here's the thing. Even though this stock has a 100% checklist, and I want to show you that 100% checklist, that means it's very good. This one is currently extended from its buy point. The question is, can we buy this on a secondary buy point? That would be if it would pull back to basically here, it would the 21-day line. So let me see what that 21-day line is. 131. So here's the thing. This is a tricky one. This is a good stock. I probably would not buy this though for a first buy here. Now, if I were in this stock, I would be very happy because you definitely made a good buy coming in here. But I would not buy this as a first buy. Now you can add here because if you have a price that's lower, if an average price that's lower than where the 21-day line is. Now, what am I talking about? Well, let's see if I can move my oops, so I can move this around here so we can see it. What I'm going to do here is I'm going to come in and take a look at, see, on the pattern rec, what I'm talking about the pivot, we're 14% above it, so we're pretty far above. We're pretty far above that pivot. On the technicals, we are basically right at the 10-day line. So we could buy a position here. I would not. It's not an ideal place to buy, but so I would not recommend this as a first buy. But as a second buy, I think you could definitely do that. And so FANG is looking very good, Paulie, and I think you've got an excellent stock. Here's the thing: what I would do on this one is I would be pushing up my stop loss, and if we get up above about 10%, you might want to consider taking profits. This is basically a take profit market. Get in, let these oil stocks run up, push that stop loss up, and then when they pull back, take the profits. That's what I did with Matador today, and I definitely think that Diamondback is definitely a candidate for this. But you're definitely in the right place in the market. This oil and gas area, this U.S. E&P area that we're talking about here, with the oil stocks, and I'm probably going to be doing, put out a list of oil stocks today if you're on the Action Trade Alerts. This is a good area to be in. This is the top area in the market right now. So this is where you want to concentrate your buys. Your buys need to be not in tech. Please, please hear me on this one. Tech is being disinvested right now. That's the reason I'm looking possibly to do a bear put spread on Facebook and Shopify. I'm going to probably be coming out with those. Right now, the market is moving into the mining stocks and into the oil stocks because these are very, very interest rate sensitive and inflation sensitive. So we're going to see a lot of run up in price. Another area of the market that has been absolutely on fire, and that is the, believe it or not, the agricultural chemicals area. This is where Nutrien is. I did sell that today, but I sold it at, after it had run 20%. I didn't want to let it do a round trip. So this is also another area in the market that is very, very good. All right, question on the Qs. I would not be a buyer of the QQQ here, and I'll just show you why. We are in a downward trend, unfortunately, on the QQQ. So what I'm going to do is I'm going to pull up the chart here for the Qs. And this, unfortunately, is a situation where it's just not looking good. I mean, we did have, and I want to show you this. There is the death cross. I call it the death cross. Basically, it's where the 40-day line moves down below the 200-day line. Now, the 200-day line is still ascending, so it is still, the long-term trend of the Invesco QQQ is still upward. We're in a retracement, but right now we're in a pullback. So I would not be a buyer here. I would wait until we have some strength and until we show a reversal. So right now, this is the reversal line that I have on it. It says dotted line. I just wouldn't be a buyer here. So here's the thing. I would not be a buyer of the QQQ. So I just think you have to be, this is, again, a tough thing to do. So, I wouldn't be a buyer of the QQQ here. And the reason I wouldn't be a buyer of the QQQ here is because it's still in a downward trend. Now, here's a rule that you want to employ when you're buying index like the QQQ. If the market isn't if the market is in correction like it is now, you want to be out of these index funds. If the market is in a confirmed uptrend, you want to be 100% in these funds. These are very good. If the market is in a if it's in an uptrend under pressure, you want to be 50% in them. So right now, not a good time, unfortunately. Until we get a signal, it's not a good time to be in the Qs or the Spider or any of those other funds because we're going to see a pullback. Unfortunately, we're going to see a pullback lower. So right now, the market is very, very, very skittish. What is happening in the market is the stocks that are being preferred have low multiples. They are low PE stocks, like shipping stocks. The stocks that are being disfavored are the high multiple stocks, such as the tech stocks. That's part of the reason I'm shorting. I'm shorting Tesla is because even though it's a great company, it's gonna change the world. It's still pulling back. Why? Because the market does not like stocks with high PEs right now. That's just the way it is. So the areas that we want to concentrate on are the commodity stocks, the stocks that are related to possibly mining, oil, maybe some grains, and shipping. Those are the areas that seem to be working right now. So the other areas that are not working, tech isn't working right now. I don't have any tech stocks at all. And I am one who loves playing the techs. So the Nasdaq, which is where most of the tech stocks live, is not doing well. Even the greatest stocks like Apple, as you can see, are pulling back. So that's kind of what I have to say there. All right, so let's take a look at some more here. What screen? I wish I could show the screen. That's going to be happening soon. But if you want to take a look at the screen, you have to go there to that. All right. So let's go for probably the last questions. And I really appreciate it. I don't know if I got to everybody. I'm trying to get to everybody. Let's see. Okay, let's look at TMC. And I don't know what's going on here to see how we're doing. Oh, Taiwan Metal. Okay, metals. Interesting. Develops low batteries. Okay. Yeah. If you're in the metals, that might be the place to be. The right now the best play in terms of the batteries is in Albemarle, ALB. Let me look at that one. That is ALB is it's called Albemarle. It's one of the largest miner. I think it's the largest miner of lithium in the world. Let me see if I can read that. ALB. That's the one you want to be looking at. Hold on. Yeah, there we go. Yeah, and it's down too, and it's got the death cross. So just a tough market. So you don't want to buy that one either, unfortunately. Just a difficult market to go in. All right. Oh, let's for the last question. Let's look at Vale. This is a South American mining company. Very good. I think it's Brazilian. Very, very well respected miner. And I'm going to take a look. Yeah, look at that. Nice chart on Vale. So this is what I'm trying to say is that the miners are doing well. The mining and metal ores. And Vale is doing very, very well. As you can see, it has this long cup pattern here. The former buy point was 2083. We're at 19. So we're just, even though it shows that the buy point is at 1815, really the resistance is right here. It actually comes across and it's right there. So that's really what we want to see it move through. I would wait to see if this thing reverses. This is in a good area, and it's got an excellent checklist. It's got an 89% checklist. The only thing it's lacking is the earnings per share. So I definitely think that you can buy Vale, but right now I would be I want to wait until it makes a move up, and then I would be probably more inclined to buy Vale. But I think this is a very good company, and it's definitely in the right area. It's definitely in the right area, and that is the mining area. Well, thank you, everybody, so very, very much. I so appreciate everybody taking a look time to tune into the show. I try to be on about every day at about 5 o'clock. Hopefully, I'm going to have some more technical capabilities here soon with the TikTok feed. I'm working on a TikTok feed where I can actually show you the charts that I've been doing. But in the meantime, if an easy way to get on our action trade alerts, and I'm going to possibly be doing a list of oil and gas, possibly a watch list. But you got to be on our list, and the list basically is easy to get on. All you have to do, and it's free, by the way, just go to www.dallastradingfloor.com. And if you're looking on TikTok, just go to my just go to my profile and first and last name and an email address, and we'll get you all set up on that. So until tomorrow, thank you everybody for taking the time out of your day to take a look, and happy trading.